heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Friday here on the Financial Exchange. It's Chuck, Mike, and is it Ben?
I mean, it is now. It hasn't been all week, but it is now.
It is now. We've gotten to the end of the week, and it's Ben with us as well. And a couple data releases this morning that we're going to get right into with retail sales data that came out at 8:30 a.m. Eastern Time, and also University of Michigan consumer sentiment data that came out at 10 a.m. Eastern. Let's start first with the retail sales report, Michael. What did we see here?
Good news and revisions. So it came in exactly at expectations, which was for a 0.5% advance from the June numbers. That's precisely what we got. Initially, the June numbers themselves were coming in at a 0.6% advance from May. That's been revised upward to now nearly a full percentage point increasing in retail sales. Not much to look at that would be negative here. I guess the one area, if you want to focus on the negative, would be building materials, which no surprise here. Not a whole lot of home building going on, and so building materials, garden equipment, etc. is struggling. But across the board, we're seeing increases in just about every category. And this was looked at as, hey, is there any sign of drop-off from the consumer in what might have been a weaker labor market than we previously thought? And I think the answer is no. Do you read this any differently?
Well, I think here's my take on it. Let's look at what we've seen this year from retail sales. I'm just going to go through the numbers, and specifically I'm looking ex-autos, just because car sales can be really volatile, especially with tariff front-loading and this and that. So this is ex-autos. January was minus 0.27%, February 0.39%, March 0.63%, April 0.04%, May negative 0.06%, June 0.8%, July 0.27%. So what we see here is that the two strongest months that we've had are March and June. March is really easily explainable in terms of people trying to front-load purchases prior to tariffs. We then had a couple months where retail sales were basically flat, even though prices were still up very modestly those months. So real retail sales down there. June was a bounce back, and July, based on what we have from the CPI data, is basically coming in flat.
With inflation. Yeah.
Right. Factoring in inflation, it's basically telling you, hey, unit volumes aren't really moving in either direction. And that kind of meshes with what we're seeing from retailers and consumer-facing companies at this point. They're kind of saying, yeah, the growth that we're seeing by and large is happening because we're raising pricing, not because we're seeing a dramatic increase in foot traffic and stuff like that. Is that fair?
Yeah. Again, this was not I don't want to misplace it. It was a 0.5% increase in total retail trade, like you said, 0.3 if you strip out autos. So it's not knocking the cover off the ball. It's not talking about an expanding consumer, but it's not weakening consumer either.
It's something that I think you could probably describe it as a Goldilocks report for where we are in the cycle right now, where you say, look, it's not so hot that it takes potential rate cuts off the table. And it's not so cold that you get nervous about, hey, are things, falling apart? It basically says kind of what we've been saying for the last few months. The state of the economy hasn't really changed a whole lot. It's still chugging along at a little bit slower pace than it was, end of last year. but there are no signs that anything is weakening tremendously. There are no signs that things are improving tremendously. It's just kind of the status quo, and I think that's what this report shows here, in my opinion.
Chuck,
that's kind of where I land.
We've been talking a little bit about the weakening sales at some fast casual restaurants like Cava, Chipotle, others. Food services and drinking places month over month did see a 0.4% decline. But compared to July last year, we're still up pretty substantially. I mean, we're still seeing overall increases in the 5.5% range. I'm just trying to make sense of the differences there. Are we seeing that much food inflation at this stage year over year when we talk about dining out right now?
In terms of like what we've seen in the CPI?
Yeah. I'm just wondering how much of that's inflation.
There's some there. It's let me see what we have. So food away from home's 3.9, so it is still showing year over year, about 2% real growth, which is fine. Like that's a good number to have there. There's nothing wrong with that. I think that when we look at food services and drinking places and just the trend that we are seeing there, just because I do think this is an indicator just of consumer sentiment, like they're feeling about the economy. You go out to eat more often when you feel comfortable about where you are economically.
Sure.
And so, you take a look at it, and the monthly numbers, just I went back and I pulled them, and in 2023, just as an example, you were seeing, multiple readings on a monthly basis of 0.5% to 1% growth in spending at food services and drinking places. That's the category from the retail report. And in early 24, that slowed, and we saw a couple months of declines. And then it kind of bounced back to, okay, maybe 0.25% to 0.5% gains through much of 24. We saw a big jump in March of this year. That's kind of where a lot of it came from. There's a 2.5% jump in a month. And then you look at 2 out of the last 3 months here, and it kind of meshes with what we've heard from earnings from a lot of restaurant companies. May was down by 0.2%. June bounced back up 0.6, but then July comes in, down 0.4. And so you sit there and you say, okay, so basically over the last 3 months, spending at restaurants has been flat, and that meshes with what we've seen with, a few companies that you noted reporting, some bad numbers on their same-store sales comps, and a few others kind of treading water to a little bit better. But overall, there's no real positive trend on that side. It's just, hey, these companies in the restaurant business are treading water right now. On the positive things that are in this retail sales report, like things where you say, oh, like here's something, that I think is notable and things that, are meaningful. Non-store retailers, basically anything online, continue to just chug along, up 0.8% for the month and 8% year over year. So you've just got, continued monster growth on that side of things. You did have a nice little bounce back for auto sales the last couple months, and this is something that we had wondered about simply because, again, the data in April and May was that auto sales declined, and not surprising, there was a lot of front-loading in February and March because of tariff concerns, and now you've had back-to-back months where you have north of 1% sales growth for autos. It's good to see people are making those big purchases. You typically make those purchases when you're comfortable, with your economic status. And so I'd say that this is something that's a counterpoint to what we're seeing in food services, where, hey, restaurant sales are declining here, but you've got people buying more cars, and that's, kind of a positive sign about consumer sentiment. So I think when you take it in the aggregate, this report, it's not perfect. It's not something where you say, oh, there's nothing wrong. But it's a solid B+ report where you say, yeah, the economy's continuing to move along. There's no major signs of any problems here. There's also no major signs of an acceleration. But at this point, you just want to say, hey, we're avoiding major problems. And this report does that. It's a perfectly cromulent report, if you will.
Big word. And yeah, we said yesterday, look, everything that's going to come out over the next month all feeds into the equation of whether the Fed cuts rates or not. And I would say that this report itself, I don't think it does anything in either direction. And so if you're already thinking I want to cut rates, this report I don't think contradicts that in any way.
No, it's a report that suggests solid, steady growth in the economy with no major change in trajectory, and that meshes with what we're seeing in most other places. I struggle right now to find areas where I see signs that the economy is changing dramatically. Can you think of anywhere you're saying, hey, this is either dramatically slowing or expanding from where it was previously?
So the only area that I can point to, which we've talked about a lot, is the labor market. And I think that
even there it's inconclusive.
It's very inconclusive. So you need a few more months of data to figure that out. But the labor market, what we learned was that in the spring, it was pretty weak. And so my kind of expectation here is, like other data that snapped back in the summer, we will see the same happening with hiring rates in the summer and unemployment rate. But that would be the one area you could point to where if that trend from the spring continues into August jobs data, then there's something you can point to weakness there. But we've seen a lot of other data points that would insinuate a snapback on hiring from other areas. So we will have to see.
Yeah, I think the last 3 months, the way that you can summarize the economy, pretty much fine, with some concerns about will there be a bigger slowdown in the labor market and will there be a bigger uptick in inflation? And there's been nothing to really change that overall view in the last few months. Now, if you start getting a couple more inflation reports that are hot, okay, now we're seeing it, now we got to deal with it. Likewise, hey, if they come in cool, okay, great, we can put that one to bed.
Right. On
the job side of things, yeah, the last jobs report, kind of a stinker. Well, good news, we get another one in 2.5, 3 weeks. Okay, if that's, positive, great. We get a whole new spin, on what we saw a couple weeks ago. So I think by and large, the economy is fine at the moment with some questions. And that's also exactly where we've been the last 2 Augusts, by the way. We've said, hey, there's some things that we're concerned about heading into the fall, and these 3 months are going to be important to answering those concerns. This is just like 23 and 24.
Right.
It's not much different from that. It's the same, type of thing, and we'll see if the economy responds with positive answers to those questions for the 3rd year in a row. Let's take a quick break here. When we come back, let's talk a little bit about that UMich consumer sentiment data that we just received, and then we'll talk a little bit more about inflation as well.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's That's DAV5K.Boston.
Cushing and Dolan know that no two families are alike, and neither are their estate plans. If you want a stress-free retirement, early planning is key. And for many, trusts are the tool of choice to protect assets and minimize taxes. But here's the challenge. There are dozens of trusts out there, revocable, irrevocable, and each comes with different rules and tax implications. From family trusts to special needs trusts, creditor protection trust to charitable trusts, each serves a different purpose. Knowing which one fits your situation can make all the difference in your plan. That's why Cushing and Dolan put together a brand new guide demystifying the top 7 estate planning trusts. It breaks down the most common trust options so you can decide what's right for your family and your future. Call 866-848-5699 right now and ask for your free copy or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
Mike, a little bit earlier today, we received the second big data release that we were looking for, University of Michigan Consumer Sentiment. Comes with the obvious caveat that I've said this for the last few months. I'm not really sure if we should pay attention to this anymore because the results seem so skewed because of whether it's changes in methodology, just changes in how us as humans are responding to this. I don't know. But ultimately, what we saw from this report was not particularly good. And the 2 numbers that I think matter are the overall consumer sentiment number, which fell from a reading of 61.7 to 58.6. I have no idea what you want the normal reading to be. It's just again, it moved up or it moved down. The other one that people have historically paid attention to have been the inflation expectations, which University of Michigan, they poll on what your expectations are for the next 12 months and then for the next 5 years. And both of those numbers, after declining over the prior 3 months, ticked back up. And so here's the trend on what we've seen this year for 12-month inflation, not projections, expectations. 3.3%. 4.3, 5, 6.5, 6.6. So it was increasing through May and then decreased to 5% in June, decreased to 4.5 in July before this one came in at 4.9. So you've got a little bit of a rebound there, and you say, okay, is that because people may be seeing higher prices coming through now? Next 5 years inflation this year went 3.2, 3.5, 4.1, 4.4, 4.2, 4.0, 3.4. So again, kind of 3 or 4 months up and then a few months down. But then last month, bumped back up to 3.9. So I think the question that's out there in my mind is, given the shift in methodology where University of Michigan recently moved, I forget the exact timing, it's within the last year or so, to an online survey as opposed to what they used to do. the responses seem to have gotten more extreme,
more partisan.
Not more partisan. The partisanship's always been there.
Yeah,
I don't think there's anything that's gotten more partisan on the reporting. Like, you look at this, and during the Biden term, Republicans said things were bad, Democrats said things were good. During the first Trump term, Democrats said things were bad, Republicans said things were good. This goes all the way back through Bush and everything. This is not a new thing on the partisanship. It's just the readings are more extreme that we're seeing, and is that a because of the shift in methodology? Is it something else? I don't know.
Does it represent a more extremely polarized? I don't know. Yeah, I'm with you.
Is it just because we felt more inflation in the last few years, and so people are predisposed to reporting higher numbers? I don't know. But here's the $12 trillion question. Inflation expectations historically are a big component when it comes to our working model of inflation. The reason being, if you think prices are going to go up 5% over the next year, it makes you more willing to pay price increases now because you still think prices are going to go up more in the future. So the whole question here is, look, are inflation expectations actually getting entrenched at a higher level? And if they do, does that turn what is potentially a transitory price increase because of, a one-time pass-through in tariffs into more entrenched inflation because we simply get used to 3%, 4%, 5% price hikes on an annual basis?
Right. Some context there, Chuck. You mentioned this month's reading was 58 point something?
Yes.
So we've seen an increase in sentiment over the last few months since the initial tariff announcements that sunk sentiment. This is the first drop in the last few months. Just for some context here, I've got the annual numbers, which I believe are averages from calendar years going back since the survey started. The highest we've seen in recent times was 2018. We came in at 98.4 back in 2018 for an average, which, I don't know, that helps me contextualize a little bit just how bad 58 is.
Yeah, I think it gives some context there.
And you go back and look at the data. I don't see. So right now, the 2025 numbers are coming in at 60 is your average. I don't see anything below 60. This is why this survey is not terribly helpful right now. In 2008, the lowest we got was 63.7. So what exactly do you do with that information, I think, is what we've just been scratching our heads on. Is it has been substantially worse now for several years. And I think most people would objectively look at the economy today and say it's a heck of a lot better than it was in 2009.
Sure. Let's take a quick break here, but when we return, do we want to talk anything more on inflation? Do we want to talk tariffs? Where do you want to go, Mike?
Well, I want to go to Wall Street Watch, and then, let's switch over to tariffs next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled Leaving a Lasting Legacy. Mike, when it comes to naming beneficiaries on different accounts, what's the thought process that people should be starting with?
Well, first and foremost would be probably you want to do it. I know that seems so basic, but Chuck, I mean, how frequently do we run into this where forget about your investment accounts. Usually those are getting looked at. Your 401k, it's one of the first things you get asked. But I run into people every day that don't realize they can have beneficiary designations on bank accounts, for instance. And what an easy way to avoid frustration after you're gone.
Can you talk a little bit about how much time and effort that can save someone after a loved one passes away when it comes to being able to inherit assets quickly?
Anyone that's been through probate will know the answer to this, but these things can last a year, and it doesn't matter if it's a $5 million estate. Obviously, that's pretty complicated, but a $10,000 checking account could also need to go through probate, and it could take an equal amount of time depending on the complexities involved. And so there are a lot of benefits that are out there when it comes to just utilizing the tools that are made available to you, and beneficiaries is a big one.
Folks, the guide is titled Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001. Again, the guide is titled Leaving a Lasting Legacy. It discusses beneficiary designations and a whole lot more. And the way to request it again is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
It's 10:34 and markets are in slightly mixed territory here. Not a lot of green on the board. The Dow Jones represents that lone green of the major indices, up about 0.07% or just under 30 points. The S&P 500 is off 0.2% or 13 points. The NASDAQ is off a little over 0.2% or 56.5 points. Target shares are down 1.3% after Bank of America downgraded Target to underperform from neutral and trimmed its price target on the stock. Target's long-term outlook is deteriorating as the company falls further behind its peers, the bank said. Ulta Beauty and Target also agreed to end their partnership. UnitedHealth shares are up 11.5%. The advance comes after Warren Buffett's Berkshire Hathaway revealed a stake of 5 million shares worth about $1.6 billion. The Big Short investor Michael Burry and Appaloosa Management's David Tepper also disclosed sizable stakes in the company. If the UNH gains hold through the end of the session, it'll mark the stock's best day in 5 years. Semiconductor equipment manufacturer Applied Materials is down 12% after the company's current quarter outlook trailed estimates from analysts. Applied Materials' fiscal third quarter earnings and revenue topped Wall Street expectations. Intel shares are up over 4%, adding to Thursday's 7% gain. The chipmaker jumped after Bloomberg reported that the Trump administration is in talks to buy a stake in Intel, which would help fund factories Intel is building in Ohio. And finally, Hims & Hers shares are down just under 2%, following a Bloomberg report that said the Federal Trade Commission is investigating the company's business practices. The FTC is reportedly reviewing whether Hims & Hers makes it too hard for customers to cancel their subscription. I am Ben Kitchen, and that was Wall Street Watch.
Mike, before we talk a little bit on tariffs, can we discuss Target briefly?
Yeah. Where to begin?
I got to tell you, Mike, it feels like they're maybe a year or two away from falling into that like Macy's Kohl's camp.
Ooh, that would be a big
fall. Doesn't it feel like that?
Yeah, I don't think they're at Sears level catastrophe, but they are.
Well, no, you
falling...
have to go through Macy's to get there.
Yeah, you do. Yeah. It would be impressively bad for them to go that direction, given that they aren't anchored to shopping malls, right? Like,
right.
For Twitter for Target to have such a disastrous performance without, dealing with the shopping mall trend would be just pretty remarkable. It would be the next telling. So the Ulta Beauty tie-up that just did not apparently work terribly well, and I'm no expert on what brings somebody in Ulta as opposed to going to a Target, but apparently that partnership wasn't working terribly well. The other tell would be if Starbucks and Target decided to end their partnership. Because you go into most Starbucks, or you go into most Targets, and there frequently is a Starbucks at the front of the store.
Yeah.
That would be pretty interesting to me if they said, you know what, this isn't working for us either. That would be another kind of nail in the coffin indication for me.
Do we have any instances of, kind of big box stores that have successfully turned themselves around historically? We have it in a couple niche areas. You remember, like, Best Buy, 10, 15 years ago? Everyone was nervous about, what was going on with Best Buy, and they figured their way out of it. But that's a niche business. It's specific to electronics.
I feel like Dick's Sporting Goods was kind of in that era, in that camp a little bit. They weren't doing terribly well, and then really revolutionized their delivery platform. So something there.
Those two both have. I wonder about a big box store that, hey, here's a little bit of everything. How do you turn the corner in a day where you're competing with same or next day delivery from Amazon and Walmart right now? I don't know what you do to get people to change their mind about Target at this point.
Alcohol. I think replace all the Starbucks with a bar and let everybody get boozed up while they're shopping at Target. That would certainly that might turn the corner for my wife, at least.
You have to walk through the bar to get to the store.
Yeah, I don't have a great answer here. They would need a pretty massive investment in a whole bunch of areas just to compete with Walmart and Amazon. Their grocery store just isn't there, and so there's nothing in particular that I think really drives people into their store anymore.
The only other thing, and this is just kind of talking about just the general change in where trends come from now. Short form video, whether you're talking like TikTok, Instagram Reels, you got to have something that catches people's eye on those, because that's where that marginal consumer decides to make those decisions now. And I say this as someone, I'm not on any of these platforms, but us old fogies, we've got to understand there's a different way that this all happens now, and short-form video is, by and large, the dominant transmission method for the people that are those marginal buyers that businesses are looking for.
Yes, but it's not driving them into the retail store, I don't think.
And that's the problem,
right.
Is, it might be about a specific product. How do you do it about a store that you need to go to or shop from? Like, what's the selling point to get people there? I don't know. It's tough. Anyways, that was a digression, but I find it interesting just because Target's in a dangerous spot right now.
Yeah.
And in retail, once you lose that thing that made you cool, it's tough to get it back. It's not that they can't. I mean, look no further than Abercrombie and Fitch, just as an example. Abercrombie was, by and large, left for dead after, the 2000s. This was a stock that, was at $80 a share in 2007 and down to $9 a share in both 2017 and 2020. And now is sitting here at 95. But I don't think as a Target, shareholder or operator, you want to be like, well, we'll just do the Abercrombie and Fitch model. Like, that's kind of the exception that proves the rule. And again, in a niche category where the product is the retailer.
All right, let me come up with an argument. Is Walmart a turnaround story?
I
don't know that they were ever really struggling per se, but I do feel as though they have dramatically broadened their customer base over the last 5 years, specifically with their grocery appeal and online expansion. So I guess I don't think they perfectly fit the mold because I don't remember ever covering Walmart and being like, oh, God, what a dumpster fire. But I do think that they have gone from just the cheapest place to buy everything to a legitimate online competitor to Amazon and a legitimate grocery competitor to Kroger.
So, yeah, I mean, the thing with Walmart is, so let's look at Target just as an example. So Target, when we talk about like some of the key stats that they have with their business, Target, if you look at revenue, the big problem right now, trailing 12-month revenue is down 4% since Q1 of 23. They are seeing sales declines on a 12-month basis right now.
Yeah.
Walmart, since it's been a publicly traded company, aside from Great Recession where revenue declined 0.5%, which you can understand, Great Recession and all that, they have not seen that since they've been a publicly traded company. So it's tough for me to say Walmart was a turnaround more than, hey, they had to get their feet under them and, deal with some things in the 2010s like most businesses did.
Right.
And then they've executed well on that.
Yeah, I guess they saw a threat from Amazon. There are a lot of questions as to whether or not they would adapt to it, and they kind of did.
But let's talk about the other thing with Walmart that people don't want to talk about when it comes to the stock. It's trading at a PE right now of 42.
Right.
In the 2010s, it was generally trading at a PE of around 15. What the vast majority of what has been driving the company is the fact that Walmart is being priced way more expensively now than it used to be. It's not that they're unsuccessful. I'm not saying that. But what I am saying is, hey, when you look at the actual net income of the company, it's $19 billion right now. It was $18 billion back in Q3 of 2013.
Right.
So profit for the company hasn't seen that dramatic of a shift in the last 10 to 12 years. It's just that people are more willing to pay more for that profit. And I don't really know what that says other than I think, look, you pay more for a company for two reasons. Either the growth rate's going to be higher in the future or you're more convinced that the growth rate they're on is stable. And I think that Walmart, more than anything else, has just proven that they are a solid operator with a really stable growth rate, and people are willing to pay for that in the retail space.
Right.
Let's take a quick break now. When we come back, we are going to get to tariffs right after this.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShare.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Piece in Wall Street Journal opinion titled, "Now We Know Who's Paying the Tariffs." And I will quote from here. The producer price index in July rose 0.9% in the month and 3.3% over the year. Consumer price data released on Tuesday, 0.2% monthly and 2.7% for the last 12 months, implied households weren't experiencing tariff-induced price increases except in some services such as medical care. The PPI numbers tell us this partly because companies are paying higher prices but haven't passed them on to consumers yet. And this gets at, again, what the PPI is, which is it's a measure of the prices received by wholesalers as they're making their distribution to retail distributors. And so pretty much what it's showing is that wholesalers now are seeing widening margins because they're able to charge more to their buyers. And to this point, the price increases from their buyers have not been higher have not been high enough to fully, pass those tariffs on. Whether that is the case in the future, we do not know. But this is something that I think, again, we have to monitor the next few months to see if this starts seeping into other inflation indices over the next quarter or so.
Yeah, the other piece that we've talked a lot about is the average effective tariff rate, which the Yale Budget Lab, which has been doing a lot of the preeminent research on this, is estimating around 18.5%. That's up from like 2.5% this time last year. That's obviously a huge increase. Others, though, like Barclays, for example, when they're looking at that weighted average, they're estimating it closer to 10%. And, that could be a number of different things. One thing they point out is behavioral changes around where companies are importing from, just trying to delay goods coming from China, hoping that there's some sort of deal there. But that's the estimate right now is, look, while that tariff rate might and probably will continue to climb if it stays in place,
sure,
right now it's just not all that substantial given, the exclusions. We talked about, for instance, Brazil, and 7 of the top 10 goods that we import from Brazil are exempted, and B, company behavior on stockpiling and other strategies that they've employed.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Mike, piece in Market Watch. Classic catchy headline. Goldman researchers warn of an unfriendly asymmetry. Why the next big market move may be down.
What is anyone supposed to do with this information?
I don't know. I mean, I'll tell you what I do. I crumple it up, I toss it in the trash and say, next, please. Because, look, I mean... okay, so the next
even
big market
reading the
move,
actual details, there's just nothing there.
There's no meat on this bone. There's not even a bone there. It's just like, woo, like the next move could be down, but it also might not be. Okay, like, great. What do I do with this? How is this in any way investable information?
It's not. It's a Friday over at Market Watch, I guess. I don't know. I think there's some important things for people to know with markets, like the fact that it's at all-time highs, like the fact that we are in the top 10% of S&P valuations ever. Those are good, important information pieces to have. Like, got it. But what would anyone reading this article change their current investment thesis, I guess is my question. I think the answer is probably not.
Right. Don't get me wrong. I'm not saying that like stocks are definitely going to go up because I don't know. But all I know is we've been seeing these pieces published since June. I mean, it's been a couple months of these now that we've been seeing them. And if you listen to them, you've gotten bopped on the head over and over in the last couple of months here. Indeed. It's not to say that it'll continue forever because, there's always wiggles and dips and this and that in markets. But golly gee willikers, if I had a dime for every time that there was a published report of, hey, stocks are overvalued, here's how they could fall, I wouldn't have to invest in stocks. I'd have plenty of dimes. I'd have enough. I'd have enough. So, this is another one. Hey, be critical when you're reading this stuff because it's very easy to read this and be like, oh, this is an expensive market. It's time to sell. Valuation has absolutely no bearing on when a market corrects. Whether you're talking about for an entire market or for a single stock. How many times have we talked about, look, Amazon's been overvalued for like 100 years and it's only been around for 30. And yet it just continued to chug along. Now, it also did go through some pretty gnarly drawdowns during its time, but I don't know. Like, what do you do with this? The S&P 500 has been, by just about any metric for the last 4 years, pretty darn overvalued. Who's to say that it falls apart tomorrow, or doesn't continue on to 8,000 instead of the 6,400 that it's at? I really don't enjoy these pieces, but I'm
precisely why Ben picked it.
I know, it's why I'm glad it's in the stack, is because it's worthy of a warning as to, like, hey, read this critically and understand what is being said here. Speaking of which, yesterday was big 13F unveiling day, where a bunch of funds are required by regulations to unveil their positions that they held in the most recent quarter. Berkshire Hathaway had to show that they bought shares of UnitedHealth, which has gotten absolutely bludgeoned this year. And so naturally, UnitedHealth is up 12% today because everyone's like, well, if Warren Buffett's buying it, we have to. You don't know when he bought it. You don't know the cost per share of what he bought it at. You don't know if there are any hedges that are in place on it. And you also, by the way, aren't Warren Buffett.
Well, he might be listening.
You're not going to know if he sells until after he sells in the 13F.
Which could be today.
It could be today. He might be selling into you right now.
Yeah. Good times.
In any case, we're done for this hour. But the good news, we got more coming up. Stick around for hour 2.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Ben with you here, and we've got a modest sell-off taking place across the S&P and NASDAQ, with those two indices down 1/3% and 0.5% respectively at the moment. The Dow being spared by the fact that UnitedHealth, which is one of the 30 components in the Dow, is up 12% today, not on any news related to what the company is actually doing, but just based on the fact that Berkshire Hathaway, in their quarterly 13F report that they have to file every quarter with the SEC, announced that they had bought about 5 million shares of the company. Works out to about 0.33% of Berkshire's portfolio. But hey, that's good enough for the stock to rally 12% today. And so with it being one of 30 components in the Dow is flat on the day, up 14 points. So not too much movement there. In interest rate world, we've got the 10-year Treasury up 0.7 of a basis point to 4.3%. Mortgage News Daily currently has the national average for 30-year fixed-rate mortgages at 6.56%. So we've gotten down, kind of into that mid-6 range, which may be providing a little bit of additional support to the housing sector right now. But it's unclear exactly where we go from here, and we'll have to see how mortgage rates and interest rates evolve over the coming weeks and months.
Good to know that Warren Buffett, good old nearly century-old investor, can still move markets like that, right?
The thing is, it's probably not even him that made the decision.
Most definitely not. He kind of retired.
Well, no, he's effective end of the year, so he's still...
Yeah.
But I'm sure, he's... What do you think Warren Buffett does in his free time?
Drinks, Diet Coke.
No, he does that during his work time, too. What does he do in his free time that's different from his work time? Do we have any
the guy's 94. It's got to be a lot of naps, right? Let's be honest.
Maybe. Okay, even so, I return to my point. Do you think Warren Buffett has an off switch? I don't really think he does. I think he just enjoys the game so much that's kind of what he does. It's not like some of these other guys where you hear about, Jeff Bezos is, off on his yacht in, this place and
Goldman
that place.
Goldman Sachs CEO is DJing.
Exactly. David Solomon DJs, at parties in New York that probably are, mediocre-ish, you hear these things.
You're right. Warren Buffett's probably kind of annoying on that front where, you want to talk about your recent vacation trip and his previous travels to Spain, and he's instead talking about the time he visited the central bank there and gave them advice on this, that, or the other.
Right, or he's like, oh, so you went on a trip? Oh, you stayed in a Marriott. What was the service like? How much did you pay?
Yeah.
Did they clean the room every night or every other night? You just get the sense there's not really an off switch with the guy. And maybe there is. Maybe, he secretly is just
He's a bridge player. According to the Washington Post, he's an avid bridge player playing a few hours each week. He reads up to 500 pages a day, and he also enjoys playing the ukulele.
Ukulele.
I did know about the ukulele. That's right.
Okay, so ukulele and bridge. Okay. Good. I'm glad we actually hashed this out because it makes me feel better about myself.
I know that
not because I'm a bridge or ukulele player, but just knowing that Warren Buffett even takes time off.
I know that I'm generalizing here, but I mean, bridge is pretty fitting of a 94-year-old. I don't know about the ukulele. I'm having a tougher time connecting that one to his age, but of the top 10 activities, you would have had me guess for someone in his demographics born in 1930. Bridge was up there.
Yeah. I would have liked to see cribbage on the board as well.
Yeah.
That feels like it would have been a good one too. Gold is up $5 an ounce to $33.88 and oil West Texas Intermediate down 51 cents per barrel to 63.45. Last couple days, we've gotten the names of some additional potential Fed chairs. I'm not really convinced that many of these are actually in the running. I think some of them are just putting names out there because that's what every administration does. They just put names out there to kind of hide that, hey, they've probably already made a decision, or at least narrowed things down to a short list. This is what you do in all of these, decisions. It's just kind of how it works. One of the people that is reportedly under consideration is David Zervos, who is the chief market strategist at Jefferies. If you Google him, you look at him and you're like, this guy's the chief market strategist? But, yeah, he is. And he's generally a pretty sharp guy. He is also now, again, in the running for this, talking about, we need to, potentially be going forward with some very rapid interest rate cuts in the face of what we're seeing in the economy because, hey, if you're campaigning to the president who makes the decision, he's saying, I want lower interest rates, and so you've got to say, I want lower interest rates too. The piece that's going to be interesting in all of this is whoever does end up getting in, how do they end up actually enacting policy? Because we've talked about this with Scott Bessent just as an example. Bessent last year was very, very critical of Treasury Secretary Janet Yellen for issuing too much short-term debt and not enough long-term debt. Bessent gets into the job, and what does he do? Continues the exact same mix that Yellen had been going through, because ultimately when faced with actually making policy, he realized, okay, this is, kind of where things are, and this is what I need to do. So I'm not really surprised that Zervos is saying this, because if you want the job, you've got to say you want lower interest rates. But ultimately, I'm not sure that Zervos is really a serious candidate for this. I still think it's one of the Kevins most likely, with Waller or Bessent kind of as 2A and 2B as the candidates that are out there.
Seems that way to me. Although you keep having sources floating that Waller is the top contender, which I kind of doubt.
Here's the thing about
Waller. There's been a lot of reporting over the last week, though, saying Waller is the top contender.
Here's the case for Waller that makes him a slam dunk if you pick him, in my opinion. The first is he's already been appointed by President Trump. Trump appointed him in 2018 or 19. I forget the exact year. So the two of them know each other. They've already gone through this process once.
Say the same thing about Jay Powell.
You could. But even then, even in his first term, President Trump was not a huge Jay Powell fan publicly. Right. So you can say that. Waller, arguably, has been the most spot on in this business cycle for the last 5 years. He has nailed every turn and has gotten every single thing right. And I believe Waller when he says, with conviction, we need to be cutting rates now, because he's got the track record recently from a position on the inside.
Yep.
And so I look at it, and he's the pick where you could say, look, he's already been confirmed once. He has the good track record, and he's been appointed by Trump. They have a relationship. It makes almost too much sense. The counter to it is I think the president really likes Kevin Hassett. And, Hassett's got to...
I also don't think Waller's going to bend in the same way others might consider. Or at least in the same way that...
Mike, let's be honest. We have no idea.
Yeah.
We think that we know these people.
Yeah, we don't.
We don't know any of them.
Yeah.
We get the stories that come out and this and that. And, 5 years ago, would you have said, hey, Jay Powell's going to, lead the charge for Fed independence? I have no idea.
Right.
So, we don't actually know these people and who believes in what and who actually is going to act in this way and that. Once you actually get into the position where you're at the helm of anything, oftentimes most people's behavior changes a little bit because you become a little more risk averse. It's just kind of how all of us are wired. Like, yeah, we all talk a big game when we're, on the outside looking in. And then when we're actually in the position, it's kind of like, okay, I better not screw this up now. It's just kind of how most people are. It's the nature of the beast. So I don't, pretend to know how anyone's going to actually act once they're in those positions. We're going to have to see, because oftentimes there is a big disconnect between how people speak and what they actually do.
Fair.
Let's take a quick break. When we return, let's talk about the 10-year Treasury, and specifically, hey, if the Fed does start cutting interest rates next month, what does it mean for long-term Treasury rates?
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com. Cushing & Dolan know that no two families are alike, and neither are their estate plans. If you want a stress-free retirement, early planning is key. And for many, trusts are the tool of choice to protect assets and minimize taxes. But here's the challenge. There are dozens of trusts out there, revocable, irrevocable, and each comes with different rules and tax implications. From family trusts to special needs trusts, creditor protection trust to charitable trusts, each serves a different purpose. Knowing which one fits your situation can make all the difference in your plan. That's why Cushing & Dolan put together a brand new guide demystifying the top 7 estate planning trusts. It breaks down the most common trust options so you can decide what's right for your family and your future. Call 866-848-5699 right now and ask for your free copy, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Time now for trivia on the Financial Exchange. During World War II, the Germans held an advantage over the Allies because of coded messages sent via their Enigma machines. British mathematician Alan Turing eventually broke the code with a machine he designed. Today's question: who portrayed Alan Turing in the 2014 film The Imitation Game? Who portrayed Alan Turing in the 2014 film The Imitation Game? Be the fourth person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. The fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Peace and Barons, what's ahead for the 10-year Treasury rate after the Fed cuts? The answer is no one knows.
But they don't know because it's actually like 50-50.
Yeah, we've had...
It's actually interesting.
When you look at Fed cutting cycles, there have been some in which you have seen the 10-year Treasury slide to lower interest rates during those cutting cycles. There are others where the 10-year Treasury has moved up during those cutting cycles. And you don't know which environment you are in until after the fact. And it's, again, all of this is based on the idea of, if you think of the 10-year Treasury as a series of short-term interest rate bets, that can evolve in different ways. So as an example, after the Great Recession, or during the Great Recession when the Fed was cutting, 10-year Treasury rate went down significantly. And the reason why was because in the post-Great Recession era, the expectation and eventual outcome was that growth and inflation were dramatically lower in that post-recession period. And so it's no surprise that the 10-year Treasury, if you look at how the rate evolved during that time, November of 2007, about a year before the Great Recession, 10 years at 3.97. By the time you got to October of 2010, it was at 2.63, and then 1.51 by July of 2012. On the other hand, if you look just in recent history, just a year ago, in fact, Fed started cutting rates last September. The 10-year Treasury from September through early January went from 3.66 to 4.79. So even as the Fed cut rates, the long end of the curve went in the other direction. The reason being, it became apparent that the U.S. was not going to go into recession and that growth and or inflation would stay higher for longer. And so the 10-year Treasury saw its rate rise in that case.
So the important lesson here is very simple. If the Fed does cut rates later this fall, which most investors believe they will, you got about a 50-50 chance of mortgage rates coming down.
Coin flip.
It's a coin flip. Now, if they end up cutting and we have something that looks like a recession at that point in time, which would be somewhat surprising for that to develop between now and September. But in times of Fed rate cuts during a recession, long-term rates tend to come down too. When they cut in a relatively strong economy, which again you don't know until after, but when they do, it's 50-50 as to what's going to happen with those longer-term rates. So do not bank on it. Bank on your savings rates coming down. Do not bank on those mortgage rates coming down. Yeah? Fair?
Yeah, I think that's fair.
Want to talk Intel? Because their stock's moving some 20-odd% last time I checked.
Yeah, let's talk a little bit about Intel here. So, was this yesterday?
Wow. Hold on.
What?
Okay, yeah, sorry. It moved 20% yesterday.
Yes.
Yeah.
It moved, about like 12% during the day and like 8% after hours, I think it was. So, here's the deal. With Intel, it apparently is at a point now where the U.S. government is considering taking a stake in the company. Okay.
So let's start there. And, do we have history here on our side of other cases where private companies or publicly traded companies have had stakes taken in them by the U.S. government?
Generally not unless there's something really wrong.
Right.
Think GM after the...
Ford, Chrysler, Bank of America.
I don't think Ford and Chrysler, they didn't have stakes taken. They just had money given to them.
Yeah, I guess.
GM was the one that was placed into federal receivership and basically owned by the U.S. government.
Yep.
So, look, I think that when you look at this, there are two questions that you need to ask on this. The first one's the one that I don't have the answer for, which is why.
I think I can maybe come up with a reason why. The reason why, I guess, would be if for some reason you get cut off from Taiwan, you need a successful intel.
Why? Not to be, a 3-year-old, but why?
Yeah, if you cannot have Taiwan Semi or somebody else developing chips in your home country, then who else is going to do it? If you cannot get your supply of semis out of Taiwan, then you want a domestic chip manufacturing company here.
Why does it have to be Intel? And I guess what I'm asking is,
Good
Taiwan
question.
Semi has facilities in the U.S.
Yep.
Samsung has semiconductor facilities in the U.S. LG has facilities in the U.S.
Well, clearly, I think the answer is none of them are American companies.
Okay. Why does that matter? The facilities are in the U.S.
I don't have an answer. Yeah, I don't have an answer. I suppose, in theory, maybe it's, hey, if I, in wartime tried to take control of those facilities as an emergency power, would I have the intellectual capacity to be to run them properly?
Well, sure, you have the workers that work there.
Yeah, I guess. I don't know.
I guess what I'm getting at is, if the U.S. really believes that semiconductors are that important, which I can buy, I'm someone who's talked about this quite a bit, and I want to have a certain amount of domestic production of them for purposes of whether it's military or civilian, you can make a national security argument on all of this.
Yep.
Why is the U.S. owning a stake in Intel the best way to get there?
I'm not sure. And, clearly the Biden administration had their own ideas about this. They passed the CHIPS Act with bipartisan support in Congress, and it did not involve taking a stake in any publicly traded company. And
can we stay right there for a second?
Yeah.
What would the response have been if the Biden administration said, we're going to take
Intel.
a 10% stake in Intel and the government's going to help run it? The answer would have been, no thank you.
Right.
Excuse me. We're not going to do this. That would have been the answer.
No, that wouldn't have been. It would have been
I think
much stronger than that.
There are two places that I get to on this. There's a completely justifiable reason why the U.S. government wants to have a guaranteed supply of semiconductors. There's also a reason why you might even want to say, look, maybe the U.S. government should produce some of its own semiconductors in order to take it out of private sector hands for government purposes. There's a case to be made on that side of things. This you kind of look at and you're like, what are we getting here? What are we actually what are we trying to do here? And I don't really get to any good answers on it.
I don't either. Hasn't happened yet. It's all rumor at this stage, but you do have a tough time connecting all the dots on why this would be good for the American public.
Let's take a quick break. When we return, we've got the trivia answer and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Leaving a Lasting Legacy. Mike, one of the things that people have to navigate now is figuring out which accounts to leave to different beneficiaries. As an example, if someone has two children, one in a high tax bracket, one in a low tax bracket, how does that potentially impact who receives which assets?
Well, let's call it out. First and foremost, most commonly, people just divide equally. Sure. And there's nothing wrong with that. I get the fairness argument with all of this. But taking your example here, let's imagine we have one person with an average effective tax rate of 10% and another one with 25%. Obviously, there's going to be a massive difference in terms of what is left over with a traditional IRA, for example, for that person in the 25% bracket versus the 10%. And so with the new rules over the last few years when it comes to requiring those accounts to be emptied over the course of 10 years in most cases, especially on the retirement account front, there's a lot of different stuff that can be looked at there. That doesn't even take into account things like non-retirement accounts, Chuck, right?
Sure.
So for those, you have a different set of rules that applies to those, generally pretty preferential tax treatment. And so you can be really intentional about how you leave the biggest legacy possible to your heirs as a whole.
Folks, the guide is titled Leaving a Lasting Legacy. The way to request it is by calling 800-393-4001. Again, the guide is called Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, it's 11:34 and markets are still mixed at this hour. Dow Jones is up 76% or just under 0.2%. The S&P 500 is up 13 points, down 13 points, down 0.2%, and the Nasdaq is down just under 80 points, or 0.3%. Target shares are down 1.5% after Bank of America downgraded Target to underperform from neutral and trimmed its price target on the stock. Target's long-term outlook is deteriorating as the company falls further behind its peers, the bank said. Ulta Beauty and Target also agreed to end their partnership. UnitedHealth shares are soaring up 12.5%. The advance comes after Warren Buffett's Berkshire Hathaway revealed a stake of 5 million shares worth about $1.6 billion. The Big Short investor Michael Burry and Appaloosa Management's David Tepper also disclosed sizable stakes in the company. If the UNH gains hold through the end of the session, it will mark the stock's best day in 5 years. Semiconductor equipment manufacturer Applied Materials is off 13% after the company's current quarter outlook trailed estimates from analysts. Applied Materials' fiscal third quarter earnings and revenue topped Wall Street expectation. Intel shares are up 4.4%, adding to Thursday's 7% gain. The chipmaker jumped after Bloomberg reported that the Trump administration is in talks to buy a stake in Intel, which would help fund factories Intel is building in Ohio. And finally, Hims & Hers shares are down 1% following a Bloomberg report that said the Federal Trade Commission is investigating the company's business practices. The FTC is reportedly reviewing whether Hims & Hers makes it too hard for customers to cancel their subscription. I am Ben Kitchen, and that was Wall Street Watch. And our trivia question today was, who portrayed Alan Turing in the 2014 film The Imitation Game? That'd be none other than Benedict Cumberbatch. Jay in Plimpton is our winner today, and Jay will be receiving a Financial Exchange Show t-shirt. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
I think you could pull off some really solid week-long trivia just about people that have the name Ben in them.
I got it. Yeah. Done.
Yeah.
Next week, we're scrapping more World War II.
I like your theme trivia.
Only to Ben's.
Yeah.
Famous
Okay.
Ben's.
Yep. Okay. Sorry.
What about infamous Ben's?
Either.
All right.
Those are my favorite
Flash
kinds of
trivia
Ben's.
question for you. What's my favorite Michael Jackson song?
No,
It's Ben.
It can't be that. Well played. So we have a piece from Market Watch. Will Powell use Jackson Hole speech to push back on hopes for a September rate cut? Honestly, I find this piece boring. I want to instead talk about this one from the New York Times, specifically talking about the Jackson Hole meeting. I'm going to skip the first couple paragraphs and then read a bit. But first, lodge staff and conference organizers have had to deal with the bats. A suspected colony of bats recently took up residence in a block of cabins on the property, which is run by the Grand Teton Lodge Company. The bats are thought to have snuck through a small, roughly half-inch hole on the roof of one of the rooms and through a connected attic space accessed 7 other cabins. 7 of the 8 bats were captured and screened for rabies, all of which tested negative.
Good.
But one was set free by a guest.
You're right. That is more interesting than the question as to whether or not he'll grandstand at Jackson Hole.
Imagine Jay Powell shows up and gets bitten by a rabid bat. What does that do to how you have to change the timeline of the Fed chair?
Yeah. Well, I would, hope they can figure that out. A few shots and get that taken care of right quick.
This then takes me to this piece that Ben included in the stack today from the AP. Radioactive wasp nest found at site where U.S. once made nuclear bombs. This seems bad. I mean, when I think of basically every comic book in history, they all start with radioactive wasp nests.
Chuck, I'm supposed to do an advertisement for Armstrong Advisory Group next, and I don't know how to work that into radioactive wasp nests.
Well, it's about legacy planning, isn't it?
Yeah, it is, I guess.
If you're concerned about radioactive wasps,
call and get the Armstrong Advisory Group's free guide on leaving a legacy.
I think so.
Oh, God, where have we gone?
This ad was brought to you by Armstrong Advisory.
So we do actually have a guide about leaving a lasting legacy that has nothing to do with bats, wasps, or that other story about bunnies that we'll get to later. But
you just never know how you're going to go. That's all I'm saying.
The guide, while not about any of those things, is about understanding affordable and reasonable ways to plan for your estate plan, what you need in place at different stages of life, different tools that are out there, how to know whether or not you need a trust. It's a financial advisor's guide to leaving a legacy, and you can get your copy by calling 800-393-4001. As you might be able to tell, I'm just barely keeping it together here. ArmstrongAdvisory.com, or please do give us a call at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, do we want to talk about fewer Americans moving, expensive salads, or smartwatches?
None. I want to talk about SpaceX.
Sure.
So the New York Times has a piece. SpaceX gets billions from the government and gives little to nothing back in taxes. And they somehow wrote 5 or 6 pages about the fact that, yeah, of course they don't make any money. They lost money for years and years, have giant losses on their books, and so therefore they don't pay any taxes because you pay taxes as a corporation when you make money.
Sure.
How did that take 7 pages?
Why is that a thing? Like, they're not.
Why
profitable.
is anyone upset about this?
They're not profitable right now. This is fine. Like, you wouldn't expect it. If I had no income, you wouldn't be like, hey, you didn't earn anything. Why are you paying no taxes? Well, I didn't make any money, so how could I do that? You know,
it's just it's lunacy. Plenty of good reasons to get upset at Elon Musk.
You didn't pay any sales tax this year. Well, I didn't buy anything. Sorry. What do you want me to do? Well, you didn't pay your car registration fee. I walk to work. What do you want? What do you want from me here?
Okay, sorry. I can move on now. What did you want to talk about?
Okay. I want to go with $17 salads.
Okay.
So it's talking about how a lot of the expensive kind of fast casual places, Chipotle, Sweet Green, Cava, have been struggling this year. And why is this the case? Have we finally reached the point where it's just like the prices are too high and people don't see the value anymore? Is it, as I posited yesterday, hey, these are places that are typically, these restaurants are typically in places that tend to be a little bit more Democrat-leaning right now, and Democrats are reporting more concern about the economy, so maybe they're pulling back on spending in these areas. I don't know. Is it just, hey, people are pulling back from restaurants in general, and this is the first thing that we're seeing here? But ultimately, I do wonder if there's a price point where people just say, I'm not paying that for that anymore. It doesn't make sense to me. Your thoughts?
Yeah, I have a tough time blaming it on anything other than what you just came to, which is I know Cava makes good food, but at $18, I'm just going to go sit down at a restaurant. Or I'm going to cook at home. I don't know. We can blame it on all sorts of other things, but yeah, people are getting more price sensitive these days compared to where they were just a few years ago. And so what seems, with some exceptions, what seems to be selling right now is value.
It does. It does. And again, I don't know how, I don't know what the path is for these companies to change the perception of value. It's hard because, like, here's the thing. Let's look at Chipotle, which Chipotle is a pretty mature franchise at this point. Like, Cava and Sweet Green are still, up and coming. They're still trying to do, more rapid expansion.
Yep.
Chipotle's pretty, tried and true here. Here's the thing about Chipotle. Their operating margins right now are 17%, which is pretty darn fat for a restaurant.
Mm-hmm.
Like, it's good. It's one of the reasons why the stock has historically traded, so expensively, is because it's been expanding quickly and maintaining good margins. But it does tell you, look, the reason that their prices are so high is they've got some pretty fat margins there. I mean, you typically talk to most people in the food business, whether it's grocery stores or restaurants, and you're talking somewhere in single digits for margins.
Right.
That's kind of where you normally live. And so part of this might have to be, hey, we can't maintain margins the way that we want to, but then what does that mean for the stock if we have to do that? These are real questions that are facing these businesses. at this particular point in time. Now, if we look at Sweetgreen, which I can't remember exactly when they IPO'd. Let me take a quick look here just to refresh myself. Okay, they've been public for almost 4 years now. It was back in the fall of 21. Sweetgreen does not have the same potential here. Sweetgreen's, they're not profitable today. They have negative free cash flow. Sweetgreen cannot say, okay, we'll figure this out and create more value by cutting prices, because they would just lose more money then.
Yeah.
So they don't have the ability to do that. Kava, when we talk about them, they went public, I think, about a year ago. Their margins are more normal. About 7% is their operating margin, negative free cash flow. So, again, there's only so much room for them to maneuver. Chipotle might be the best position to get out of the tailspin that they're in right now, simply because they have margin that they can work with. These other ones, it's a little bit tougher, and they're going to have to really figure this out and play around with some different levers that they can pull, because they can't really do much on pricing given where their margins are. That's kind of where we are there. Let's take a quick break. When we return, Paul LaMonica from Barron's joins us after this.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Cushing and Dolan know that no two families are alike, and neither are their estate plans. If you want a stress-free retirement, early planning is key. And for many, trusts are the tool of choice to protect assets and minimize taxes. But here's the challenge. There are dozens of trusts out there, revocable, irrevocable, and each comes with different rules and tax implications. From family trusts to special needs trusts, creditor protection trust to charitable trusts, each serves a different purpose. Knowing which one fits your situation can make all the difference in your plan. That's why Cushing & Dolan put together a brand new guide demystifying the top 7 estate planning trusts. It breaks down the most common trust options so you can decide what's right for your family and your future. Call 866-848-5699 right now and ask for your free copy, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
As promised, we're now joined by the one and only Paul LaMonica here to talk a little bit about Otis. Paul, what's going on with Otis today?
Yeah, Otis shares are down this year, but the elevator and escalator leader, there's some promising signs why the company could have a decently rising stock price going forward. Spoke to the CEO recently about why she is optimistic after a recent trip she took to Asia to see customers in China, South Korea, and India. Those are markets where there is, pretty strong demand, particularly for refurbishing, the services side of the business. And that's something that in America as well, a lot of elevators need to be modernized. And as a result of that, Otis generates a steady, income and revenue stream from all those maintenance costs. So that's something that is potentially, good news for the company. And the stock is trading at a reasonable valuation and discount to some of its European peers.
When we look at Otis, how much of the breakdown in revenue is, new construction and installations versus that maintenance that you mentioned? Do you have any sense of what that looks like?
Yeah, the maintenance side is continuing to grow pretty rapidly, and I need to look up what the most recent numbers were. But yeah, it's a split between new orders as well as their services business and maintenance business. If you look right now, services, their net sales were up about 6% in the most recent quarter, and that is 3.6 billion overall in revenue, and the services side of that business is the lion's share. It's 2.3 billion of the 3.6 billion of the overall sales. So definitely it is a lot of the maintenance side of the business that is increasing their revenue as opposed to new orders for new buildings that are being constructed and what have you.
Who are the other competitors that even operate in this space? I don't really know.
Yeah, they are not really companies that are household names in the U.S. Otis is by and large the major company. Otis does compete with Schindler Holding and Cone, which are two European rivals. But I think Otis, and especially now in the past couple of years, because it's a standalone company. Remember, this used to be part of United Technologies, UTX, the big conglomerate that has a large defense business. but UTX spun off Otis and then also Carrier, the HVAC giant, into two separate companies, so that Otis now trades, on its own, separate from United Technologies.
What does this company do to grow, I guess, then? Since the spinoff, they had a good first couple of years there, but, the stock's at $87 a share right now, basically the same place that it was at in August of 21, so it's had 4 years where the price hasn't really moved. Is this just kind of a low-growth business overall now, or is there anything they can do to kind of beef things up here?
Yeah, I mean, I think, in some respects, there's only so much that the company can do because they are somewhat reliant to a certain extent on construction around the world. The maintenance side of the business is something that, as long as they're able to get these steady contracts with customers in office buildings, residential buildings, retailers, for elevators and to a lesser extent escalators, that's something that can help juice sales. But I think the valuation, it's trading around 22 times earnings estimates for this year. Earnings growth is steady at about 10% or so over the next few years. So it's not trading at an absurdly high valuation, given that you have slow and steady growth. But yeah, make no mistake, if you want something sexy and exciting, there's NVIDIA, there's Meta, there's Mag 7 companies. Otis is not going to be confused with that. But this is a solid industrial name in a business that's not going to be made obsolete by AI anytime soon. There's no such thing as a ChatGPT elevator last I checked.
Very good. No, there is not. Paul, appreciate you joining us. Thanks so much for the time, and I hope you have a great weekend.
Thanks a lot. Same to you guys.
That is Paul LaMonica talking about Otis. Mike, any last items that we haven't gotten to that you want to touch on today?
Yeah, a really expensive and highly important attorney in Australia who charges God knows what, and I think refers to himself as the king, or other people refer to him as the king, had to apologize to a judge because he or one of his clerks used a bunch of AI to cite case law that didn't exist and delayed a whole bunch of stuff because of bad uses of artificial intelligence. I'd be really pissed paying for that defense attorney for God knows the hourly rate and then getting in trouble because he used AI.
I got to be honest, here's the thing, if you lie to a court, generally, it's looked upon pretty unfavorably.
This should be lying.
How is this any different?
Yeah.
You're making stuff up. It's just you didn't
do it yourself.
Yeah, it's kind of infuriating. Quick break for the entire weekend. We're back on Monday. We will see you then.